morning, everyone. My name is Dipesh Deshmukh, and welcome everyone to the IBG's webinar series. For people who don't know what is IBG, IBG is India Business Group. We are a chamber of commerce. We help our members extensively in getting connections, helping with business, generating leads, helping contacts. So we go out of the way to help our members, and it's really a blessing that the chamber really does a lot for the members. Right now, Corona times, things are not fun. People are at home, but IBG is organizing these webinars where we are able to hear some world leaders, some excellent speakers, and we get to learn a lot. So that is in Crux IBG. The founder president of IBG is Mr. Vikash Mittarsen. He's an absolute passionate networker. He's a mentor, he's a friend, he's a business guru. He has written a few books now. He's already writing a couple of books. Vikash, can you just say hi to people so they will be able to see you?
Hi, you guys. All good?
All good, rocking.
Yeah, that's important. That's what I want to hear.
Thank you, Vikash. Thanks. Now, our IBG team, we have Siddhi and Girish. They are absolute pillars of IBG. They help our members. They are connected with the members. And thank you guys for doing whatever you do for all of us. And our CEO, Priya Pansare. Priya, can you just say hi to everyone?
Hi, I hope everyone is doing good. And I welcome Steve today for this webinar. Hope we all have fun conversation.
Absolutely. Thank you, Priya. All right. So, few quick rules of the webinar. Everyone will be on mute, and only the speakers will be speaking. I will also request everyone to turn off your videos so that others don't get any disturbance. So I'll really appreciate if you guys can turn off your videos so you can be in audio listen mode only. And the third rule is, if you have any questions, just type them in the chat box. At the end, we will have a Q&A session. And so by 12, whatever questions we can ask Steve, we will ask. If there are many more questions, then we will email them to Steve and we'll have them answered and we'll send it to you. All right. So these are three simple rules and we are absolutely looking forward to hearing Steve. Now, before I bring him on, I would like to introduce him. So Steve, he's from Cape Town, South Africa. He's grown up there. He's done his college in South Africa. He's also done a master's program from France, INSEAD. His career spans over various industries, including retail, financial services, and shipping. He currently holds the position of Managing Director of South Asia Markets for Maersk, the world's largest integrated container shipping, logistics, and supply chain company. He's based in Mumbai currently, so we are very happy to have him here. He's here for 3 years, so he's almost a Mumbaiker now. And he leads the businesses in India, Sri Lanka, Bangladesh, Nepal, Bhutan, and Maldives. Prior to this appointment, he held various executive positions within Maersk lines, mostly as MD of Eastern Africa, based in Nairobi. Then he was based in Israel, Tel Aviv. He also has been posted in Canada and the US. So just like his company, he's absolutely global. He's traveled the world. Steve's strongest area of expertise is in emerging markets and underpinned by his extensive experience in establishing and growing businesses in such markets. And a couple of very interesting things. He was received by His Holiness Pope Francis during His Holiness 2015 visit in Kenya. He was received by various heads of states of Denmark, Belgium, Sri Lanka, several countries. But the biggest and the most exciting part is he was awarded as Expat Excellence Award by IBG in 2019. So we're absolutely happy and blessed to have you, Steve. And just say hi to everyone and then we'll start your presentation.
Thanks very much, Dipesh. And hi, everyone. Thank you very much for taking the time this morning to spend with IBG and with me. And I'm looking forward to sharing a few thoughts with you.
Thank you, Steve. Siddhi, can we have the presentation, please? All right, over to you, Steve.
Great. Thank you very much. So I think what I'd like to cover briefly is four things. First of all, just a little bit of an introduction into the global shipping industry, a little bit of an introduction into our company, just so you have a perspective, drill down to our company's activities in South Asia. And then I think obviously very topical right now is the COVID impact and what that has meant for trade and what that is likely to mean for trade and our industry going forward. So if we move to the next slide, shipping is really an engine of global trade, and shipping and logistics enables consumers and producers to connect. It enables importers and exporters to connect to markets around the world. And today everything around us, more or less, whether it's furniture, whether it's foodstuffs, whether it's electronics and so forth, there's a good chance that these items have moved somewhere or been produced somewhere else and moved by ship, by container to your doorstep somehow. And so container shipping is a really important business, and it's a really enabling business. And I should mention that in the past 30 years, there is nothing that's added more to global prosperity and to global GDP growth than international trade. So we're very conscious and humble about the international role and the important role that we play in international trade. If we move to the next slide, just to share with you, this is kind of a landscape of the industry. So essentially, the industry in terms of logistics is about a $4.7 trillion industry across the world. There's been a lot of consolidation over the years. There have in fact been 4 waves of consolidation in container shipping. And I think today you could say that 7 odd carriers manage about 70% of the global capacity. And so for example, as Maersk, we acquired Safmarine, we acquired P&O Nedlloyd in 2006. We then acquired Hamburg Süd in 2016. We've had, for example, Costco merge with a couple of other carriers within Asia. CMA CGM has bought APL, Hapag-Lloyd bought UASC, and ONE is a combination of 3 Japanese carriers. So we've seen a lot of consolidation in the industry. At the same time, when you look at the top trade routes, essentially trades that move, as we put it, east to west, are by far the most voluminous trades. So east to west would basically be between Asia and Europe, Asia and North America, and Europe and North America. These are by far the 3 largest trade routes by volume. And so that just gives you a little bit of a perspective about the industry. Now, often what happens is in the industry is that there's an imbalance of trade. So on a macro level, what you would see, for example, is between Asia and North America, typically you would see that the ships will arrive full, and you would see that the ships going back would carry also a lot of empty containers because there's not enough demand for products produced in North America in Asia. And the empties are needed to be repositioned back to Asia to re-export. So trade imbalance is a reality. It's also a reality, for example, here in India, where overall India is actually a balanced trade, is more or less equal on imports and exports in terms of container trade. But for example, you would see a big mismatch in corridors. So there would be, let's say, a huge import demand into Nepal, but there would be a huge export demand from Gujarat. So the containers are not always in the same places at the right times. At the same time, we would see a market where there's an imbalance of container types. So in one particular location, you would see that 20-foot containers are in more demand, and in another there would be 40-foots. And often exports of certain commodities would be in 20-foot containers, whereas imports of consumer goods would be in 40-foot. So there's all these imbalance factors that container shipping as an industry has to manage. If we move to the next slide, just want to share with you, this gives you on the right-hand side a vessel schematic, which basically shows that ships are getting bigger. And this cuts to the, what I call the vicious circle in the shipping industry. So the first container ship was introduced in 1956, and it carried 58 containers. And now we have vessels that carry more than 20,000 containers. And that is largely because scale is required in order to drive down your unit cost. But in order to do that, so that incentivizes you to invest in larger vessels. But in order to do that, you need to be able to fill those vessels, and that can lead to overcapacity. It can lead to a price war. It can lead to low returns, and often actually this industry is characterized with high capital intensity and low returns. If we move to the next slide, please. Thank you. One thing which I should mention as well, which is very important about our industry, is today there is still a lot of paperwork across the industry. For example, we still have physical documents called bills of lading, which are the contracts of carriage. There's physical invoices, there's all sorts of stamps and validations and checks and so forth. And of course, that's quite inefficient. At the same time, we have been trying to take a lead as a company in order to digitize the industry on two levels. First of all, within our own business, and secondly, on a more macro level. So within our own business, today, actually, you can go onto a portal, you can get a market relevant price, you can make a booking, it gets instantly confirmed, you can submit your shipping instruction online, you can get your delivery order online at the destination, or if you're an importer, you can download invoices on your own, and there's a lot of electronic payment options as well. Now, these seem, for many industries, these would actually seem quite basic, but for the shipping industry, it's taken a long time to get there, and there are many players that are still quite far behind in the digitization process. At the same time, our vision is actually to make shipping as easy as booking an airline ticket. Now, the other way which we're trying to transform the industry is through a product which we developed with IBM called TradeLens. When I was based in Kenya, we followed a container of avocados from Nairobi to Rotterdam. And would you believe that just for that one export of one container, there were more than 25 different companies involved. There were 70 different documents, and there were more than 200 communication interactions. And of course, there would happen, the reality is there has to be a better way to do this. So we co-created a solution with IBM secured by blockchain technology, where we could digitize the process, put everything into a secure cloud, secured by blockchain, with an audit trail. And that would include customs processes, that would include commercial invoices and packing lists. The forwarders are connected, the shipping lines are connected. It's an industry neutral, non-partisan platform, and that's been rolling out for the last couple of years, which is quite exciting. So just overall, it's an industry that is very capital intensive. It typically has low returns because of this vicious circle that I mentioned. There has been some healthy consolidation across the industry, and the need right now is to digitize this industry. If we can move to the next slide, please. Just a brief introduction, the next one, please, about ourselves. We're a $40 billion company, and our footprint, actually the company was founded in 1904, and the footprint today is very extensive. We have about 600 offices across 130 countries. If you can just move to the next slide, please. Now, what's very important about our company is that we were typically in two key businesses. We were in transportation and energy. So in our transportation, we had shipping. We had the shipping lines. We had terminals. We had supply services to the oil and gas industry. We had tankers and so forth. And then on our energy company, we had oil and gas exploration, which was a large company, a big cash cow, and with a very exciting future as well. But when we reviewed our strategy 3.5 years ago, we decided that it was time to focus our business on transportation and logistics, and to become a much more integrated company offering end-to-end logistics solutions to our customers. So, and to underpin that with a digital transformation across the business, so that, you know, as a customer, you're able to get all sorts of services, and I'll go through that if you go to the next slide. You know, because shipping is actually, or logistics is obviously fairly complex, and customers were telling us that they wanted to deal with fewer people, that they wanted to deal with you know, companies that they could trust. They wanted simplicity and visibility in their supply chains, and they wanted accountability. So they wanted to know exactly who they could hold accountable. So for us, you know, the type of products that today we offer, how we've evolved in this journey to become an integrator of container logistics, is that today, in addition to the core product of port-to-port shipping, we offer intermodal transport, which is inland deliveries or pickups. We offer warehousing and CFSs, which we own as assets, usually. We offer customs brokerage. We manage air freight. We also offer consolidation services, trade finance. We offer 4PL, which is kind of like a watchtower function. We offer solutions to the e-commerce logistics industry, cold chain logistics in the reefer market, and very sophisticated supply chain management solutions. So for example, if you're a Walmart and you place a purchase order with a company in Rajasthan, that comes into our system. We manage the vendor to make sure that they deliver on time. We manage the clearance, we manage the transportation, we manage the shipping, and we provide end-to-end visibility throughout, regardless of whether it's on the Maersk shipping line or not. So that's how we've transformed. And I must say, it's still an ongoing journey, but initially, you know, the signs so far are very, very encouraging. If we can just move forward, please. And I'll just hone in a little bit on South Asia, which is my geography. So if we can just move forward, please. So in South Asia, overall, if you take the market, it's about a $300 billion market. And what we're seeing is the market today is very fragmented. And there's huge disconnects in the logistics landscape, particularly from a cost perspective. So for example, you can move a container of widgets from Mundra to Jebel Ali for a few $100s, but it'll cost you $1,000 to get that container from Punjab to the port. And that's why this national logistics policy that the government of India is working on is so important, because it's important that we need together as an industry to bring down the cost of logistics and make it easier for the customers. In Bangladesh as well, which is very dominant in the textile and garment sector, a lot of challenges in Chittagong port, which is really a bottleneck. In most cases, it's congested a lot. It's got a very shallow draft, so you can't bring big ships in there. And there's a lot of focus now on building infrastructure to augment that. And Sri Lanka, even though it's a small economy and small country with a small population, it's a very key transshipment hub, very strategically located between Asia and Europe. And actually, the port of Colombo is the largest port by throughput in South Asia. Just our company does about 1.2 million transshipments there per year. And Sri Lanka is also trying to position itself as a hub in transit for certain cargo. If we could just move forward, please. I just want to give you the perspective of our business. So essentially, this is our footprint, and we operate across 34 different locations. If you take our offices and our depots combined, and we're serving customers around the world, importers and exporters around the world. We have about a 20% share of the market on the shipping side in South Asia, and we're building quite a strong position in the other products as well. And the way that we run the business is we run it by geography. So we have West India, which is basically Maharashtra plus Madhya Pradesh and Goa as one geography, one accountable business unit. Then we have North India, which is basically NCR, Gujarat, and everything to the north. And then we have the entire east coast, which stretches essentially from Tamil Nadu all the way through to Nepal and Bhutan. And then we have Bangladesh, which is an independent business unit, and Sri Lanka and Maldives. So that's how we've structured the business. But I think it's really, what's really exciting is that we are, part of the growth story of South Asia because we are enabling trade and ensuring that we can connect importers and exporters to markets around the world. Please, let's move forward. The last thing I want to share with you is about COVID, how it impacted the business, how it impacted the industry, and how we've dealt with it. If we could just move forward, I think, reflecting on this, the highest period, of change that we've had is 2020, pretty much since the invention of the container. In fact, the impact that we've seen has been so dramatic, one could almost say that it's even more dramatic than the financial crisis. If we just move to the next slide. In the logistics industry, we talk about, and in many industries, we talk about this black swan event, which is something that hardly ever happens, but when it happens, it's of course very far reaching. If we just move to the next slide, this just shows you the landscape of risk factors across the logistics industry. And what we've seen here is triggered by the pandemic. We've seen a whole lot of issues arise from that, and other secondary challenges such as delays at the border, currency fluctuations, price volatility, disruptions in IT, failures in infrastructure, demand shock as well, etc. So, I think it's a really, really, it was a really high impact when this happened, and I'll talk about it in a second. Please move to the next slide. So what we saw essentially is it started in China, and after Chinese New Year is when it really started getting intense, and the supply shock was really, really intense. So, China essentially came to a complete standstill. The factory of the world came to a complete standstill. And then as China started coming out of the pandemic and started recovering, and people started getting back to work in the factories, then of course what happened was the pandemic started spreading west. And the supply shock was then followed by a demand shock. So today, for example, we see, let's say in Bangladesh, which is very reliant on the retail and garment segment, we see that there's been a huge demand shock in the destination markets in America, in Europe, in Australia, and that is creating challenges as well, aside from the supply side challenges. And I'll come back to the India specific stuff shortly. If we could just move forward, please. So what we decided as a company is that there were three priorities that we outlined at the outset as we saw this pandemic setting in. The first was to safeguard our people. The second was to make sure we could keep trade moving and serve our customers during this difficult time. And the third was to help the societies around us to fight the virus. And I think on the people side, if you can just go back, please, for 1 second. On the people side, what we did is we stress tested our business continuity plans so that by the time it came to move to a work from home scenario in South Asia, we were very ready for that. And what happened was, we had scaled up our IT infrastructure substantially, and we were able to get our people out of the office into their homes, into the safety of their homes. And therefore we didn't have any infections. At the same time, we kept our depots running because we own a number of container depots and CFSs. We kept our counters open so customers could get their cargo released, and it was of course considered essential services. At the same time, we worked with our customers, based on the bottlenecks that we saw in the landscape, which I'll get to in the next slide, to see, based on these realities, what could we do to help the customers? What could we do to make sure that their trade keeps moving? So for example, for importers where road capacity was challenging because a lot of truck drivers retreated to their home villages, and also Customs brokerage became a challenge because we had a shortage of customs officers, we had a shortage of customs agents, and interstate transport by road was extremely difficult anyway. So we worked with a lot of customers to convert cargo from road to rail, which helped them to keep their supply chains moving. This is just one example. And then helping society, we were able to initiate quite an extensive CSR program in several phases, which initially entailed the communities around our depots and CFSs, where we did some desanitization drives. We supplied food parcels and sanitization kits, and ultimately we supplied PPE to hospitals. And we're continuing that as we move. In Sri Lanka, we're working on logistics for ventilators, and in Bangladesh, we're actually supplying ventilators to hospitals. If we can just move forward, please. So what we saw in India specifically, when the lockdown started, we saw manufacturing, of course, mostly came to a standstill. Transportation, as I mentioned, was challenging, particularly on road. Customs clearance, as I mentioned, was challenging. And because even though exports dropped substantially, imports continued to flow in. And what that meant was that the port ecosystems became very congested, and we had to work with multiple stakeholders to get additional space for containers to be stored around the port ecosystems. Thankfully, today things are much better, and today exports are also starting to come back as manufacturing has restarted, and so forth, and some of these supply side challenges have renewed themselves. If you can just move to the next slide, please. Yeah, I think also what's happened is that a lot of companies and vendors have experienced also additional operational costs when moving goods during the pandemic. It might be in terms of paying overtime and accommodating staff. It could be in terms of paying more for trucking because there's a shortage of truck drivers. We see that quite often. We've had some labor shortages as well, I think a lot of other compliance costs when it comes to what we need to do in order to keep offices sanitized, or new reporting obligations, etc. And I think from our perspective, we've always been encouraging customers and suppliers to minimize port stays and detention of containers as much as possible in order to minimize the risk of congestion and maintain the flow of goods. And I must say, we've seen a huge impact lately, where in 2 weeks we've seen really about 2/3 of the imports cleared since lockdown 4.0 began, or even before that. And then if we can just move to the next slide. So I think what helped us to navigate the challenge was these business continuity plans, which we stress tested so that we didn't wait, because we learned a lot from China, and we consulted with our colleagues in China on how they handled it. Making sure that our depots and counters were operational, adapting our business processes to serve customers during this time. For example, helping customers get release of cargo without the original documents, making sure that our IT infrastructure was sufficient, because our digital capacity has really been a strength through this pandemic. And also just making sure that we're in touch with customers and communicating with them, so that they know that we're here for them. I think what we can see, if we move to the next slide, one key theme that's coming out is as a permanent change, is that there's going to be a lot more focus on supply chain resilience. And I think it was a huge supply shock when China came to a standstill, and I think a lot of companies started to rethink their sourcing patterns and to look for some sort of diversification, whether that might mean additional sourcing locations or near sourcing, etc. So I think what we've advised our customers, if we move to the next slide, is first of all, create a cross-functional team to have a look at this, and to make sure that the planning is on track, that you're building various scenarios and with clear trigger points for decision making. Looking at a holistic supply chain approach, not just looking at each piece of the supply chain, and make sure that you can safeguard against disruption risks and have backup plans. Making sure that there's sufficient visibility so that you can keep tabs on your supply chain through trusted partners on an ongoing basis. Consider using fewer suppliers where possible, so that you can leave the complexity to them while you focus on your core business. Sourcing material in multiple locations so that you can ensure that that you are able to deal with any let's say black swan events or similar. Make sure there's transparency and that risks are flagged up front. And if you just go to the next slide, make sure to learn from best practices and build relationships as well with suppliers and partners. I think in the future, companies are expected to place more value on building resilience within supply chains. And no one expected that entire parts of the globe would come to a halt. And I think that we need to consider what that means for how we all manage our businesses in the future. So that is really what I wanted to share with you today. Just before I close, I just want to share one more slide with you. And what we did is we asked all our team members across the board, across different functions, across different countries. If you could just move to the next slide, please. How can we really supercharge this recovery? Because as we start to see the light at the end of the tunnel, what can we do to make sure that we come out of it strong? So number one was to make sure that we drive our digital strategy and accelerate that. Make sure that we remain very agile and entrepreneurial. Have scenario planning in place so that we can activate various scenarios when needed. Accelerate our transformation as much as possible during this period. Make sure that we stay close to our customers and adopt new ways of working and be open to those new ways of working. So these are some of the steps that we're going to be taking. So that's what I wanted to share with you. Thank you for listening, and I think we can get into the Q&A now, Dipesh.
Yes, certainly. Thank you so much, Steve. I mean, this was absolutely extensive, exhaustive information, and we have a whole lot of questions. I'm going to just start going through some of them. All right. Hi, Steve. Since global trade seems to have an expected shrink, does this larger ship deployment to a mid-size vessel coming back to practice, considering near sourcing is something many are exploring to minimize the supply chain disruption?
Well, I think, obviously with large assets, it's very difficult to, to basically change your asset structure quickly. But what shipping lines have by and large been doing is adjusting capacity to match the new demand levels and be agile in that respect. So it's cheaper to keep vessels idle and not deploy them in the short term, rather than to deploy them and they sail empty or with low utilization. So I think the industry's been very agile in that regard, and that means that there's largely enough supply on the water, but it's not too much supply so that you get into a situation where all of a sudden the vessels are underutilized.
Yeah, makes sense. Vikash is asking, what will happen to the massive millions of tons crude carriers going forward? Crude oil demand is shrinking.
Yeah, I can't comment on that because we're not in that business at all.
Okay. So again, next question is related to crude oil. I will not take that question.
Yeah. One thing I will mention on the oil side is that, typically for a shipping line, oil is your largest variable cost in the form of bunker fuel. And we spend about $4 billion a year on oil in our group.
Wow.
And so it's obviously very extensive. Now, we already had one big change at the beginning of this year with the IMO 2020 regulations. IMO is the International Maritime Organization, which essentially regulates the industry. And IMO, together with the industry, has been on a journey to reduce carbon emissions in shipping. Shipping accounts for about 2 to 3% of carbon emissions. So you could say relative to the role that shipping plays and the volumes, it's quite low, but it's still 2 to 3%. So everyone's committed to reducing that. We've actually set a goal to create carbon-free vessels or emission-free vessels by 2030.
Wow.
And we're leading that in partnership with the UN. But aside from that, what happened was we had to build a supply line for low sulfur fuel as we moved from 3.5% content to 0.5% content on the 1st of January. And that was a huge exercise in itself. But I think that it is something that, it costs a lot more in the short term. Now prices have come down, even the low sulfur fuel, and that's encouraging. And we have a formula whereby we pass that benefit on to customers because there's a bunker adjustment formula, which is very transparent with trigger points.
All right. Next question, we are into warehouse leasing in India. What is your opinion about the requirement of warehouses by the company?
So I think today, the nature with VAT, GST, with the GST implementation in India, obviously the warehousing has changed now, where you're looking more at coastal warehousing or in key hubs. So I think the warehousing is still a big industry in India. I don't recall offhand the exact size, but it was massive. And today, I think we have to get through this short-term shock as things start to normalize. Hopefully, from Q3 onwards, then we'll have once the dust settles, we'll have a better picture. But what's interesting is, what we've seen in India is that some customers have said to us, look, we need to slow our supply chain down, and therefore we need warehousing or more warehousing than usual. And some have said we need to speed it up, and we've had to do that. So I think, as companies evaluate their supply chains and look for more resilience, it could well lead to a higher demand in warehousing solutions.
All right, thanks. Okay, we have a question from Nilesh. What is your take on unrealistic import delivery charges billed by carriers? On one hand, carriers are competitive freight rates. On the other hand, they recover it by exorbitant delivery order fees.
Okay. I mean, it's difficult to have a link to each shipping. Obviously, each shipping line makes their own decisions in terms of how they want to structure their tariffs and pricing, and that goes pretty much for anything. I will say, on a macro level, shipping industry has delivered returns way below the cost of capital for 30 years. So it's certainly not an industry that you get into to get rich. But in terms of fees, there are some fees which are linked to certain activities, and that will depend again from shipping line to shipping line. So, for example, there could be a fee to issue a delivery order, which involves staff member actually doing something. There could be a detention, which is if you don't return the empty container in line with free time requirements, then and the carriers need these containers. They don't. It's not like they want the money. They need the containers to turn them around for exports. So I think again, it's hard to answer on a more generic level, but typically there are charges that are associated with various activities. But still, as you can see from all the publicly available information, this industry is not a very attractive industry from a profitability point of view.
His next question is, detention tariffs of carriers are killing importers and many times even genuine importers. Several external factors are responsible for the delay in obtaining delivery of goods for consignee, but still carriers charge hefty detention fee. Can this issue be addressed in more practical and customer-friendly manner?
Yeah, I think in general it's always a bit of a dilemma because detention, as I mentioned, it's a punitive charge. So it's not a charge that is a standard charge. Most customers would not be paying it. And it would be more related to if there's specific challenge or a specific reason for not taking delivery of the goods on time. There could be a range of reasons. It could be a delay at customs. It could be because someone hasn't paid someone else. It could be because the customs broker has delayed it. It could be that there's transportation challenges. We've seen a range of issues. It could just be that we've had a lot of experiences over the years where some people actually want to use containers as free warehousing. But the fact is, one must appreciate that the containers are our main assets. Ships and containers are the assets that we invest in, and we need to utilize those assets. And and predominantly we want to utilize those assets for our core business, which is exporting and importing containers. Right. And if we're unable to do that, and because someone cannot return the container in time, then we would charge a detention fee. Now, I would say that in India, I've seen that generally India has much more generous free time in the market than many other countries. A lot of customers get way beyond the standard free time of 5 days, it's a dilemma. But I think we always say that ultimately we negotiate a free time deal. If that deal is if a customer is not able to I'd say return the empty container in time, then there should be a charge. But of course, there are many cases where customers approached us and we've helped them.
All right.
I can't speak for the other shipping lines. I don't know.
All right. Next question. Shipping line provide ETD and ETA at the time of booking, but after shipment is delayed at transshipment, what risk and responsibility is borne by shipping line due to this customer cancels the goods?
Well, the short and sad answer is none, in the sense that the bills of lading globally are quite clear that there's no guarantee in terms of when cargo will be delivered. Obviously, I think that every shipping line has the intention to deliver the cargo on time and as per schedule. But as you can imagine, shipping is an adventure. There are many things that can go wrong along the way. For example, just 2 days ago, we had a big cyclone in Calcutta. It affected Vizag. It affected Chittagong. And of course, cargo is going to be delayed. There's just no way around it. So these things do happen. I must say on-time delivery generally across the industry has improved a lot in the last 18 months. It's still not where it should be, in my view. It still has a long way to go. But if there are delays, sometimes they just cannot be helped. And unfortunately, the shipping lines are indemnified in that sense. Right. I know it's a tough pill to swallow, but it does happen sometimes.
All right. Next question is, Steve just mentioned about Maersk into trade finance. How competitive is the cost and interest rate compared to the other trade finance companies in the world? This is coming from Shubhalakshmi Polyester, Mr. Anil Nair.
Yeah, good point. So essentially, I think what we started this trade finance business a few years ago in India, and the reason being that there were a couple of challenges. Number one is the access to credit here is very challenging, and there's a dearth of credit available in the market, particularly for the MSME sector. Secondly, we have a number of levers in terms of our ability to manage credit risk when it comes to trade finance, because we control the physical flow of the goods and we control the documents and we know the customer. So, so we decided it would make sense for us to take some credit risk and offer it as a product to customers. Generally, it's very competitive. It's LIBOR linked. The nice thing about it is there are a few options, but typically it's off balance sheet. So it's a good way to manage the balance sheet element of it. And there's been, I'd say, quite a lot of uptake. I must say right now we're kind of going slow because of the situation and liquidity is very tight in the market. but you know, we will seek to ramp up at another time. But it's just a product that has had a lot of appeal in the market. Another one is Value Protect, which is an extended liability product, similar to an insurance type of product, where if there's you know, if there's damages, etc., then up to a certain limit the customer doesn't pay, and that can be selected at the time of booking, similar to when you book a flight and you can opt for travel insurance. So that's also been taken off very, very well.
All right. So next question from him is a very interesting question. When crude prices go up, immediately shipping companies increase the prices. But now the crude prices are down substantially. However, we don't see them lowering the prices.
So most of the lines that I've seen actually are. I know that we've announced our pricing. You know, it works on a monthly basis. There are a couple of carriers that do it on a quarterly basis, which I don't understand because it is very, you know, dynamic. But like for us, we work on a monthly basis, and we give indications every month on what the bunker fee will be for the following months on the different corridors. So we've actually brought our bunker cost down substantially, and it's going to come down again in June. So all, you know, again, each shipping line will define their own ways of dealing with it. You know, we chose a very transparent route, and we're staying true to that.
Okay. So next question is on transparency. Nowadays, most of the countries have lockdown, all the clearing delayed due to lockdown. What will shipping line do about the free detention period? If you're asking here to provide more free detention, their answer is to ask your buyer or contact destination. And so can the shipping lines be more transparent with the guidelines?
Sure. So if we look at India, when the lockdown started in the last week of March, we actually we were the first carrier as Maersk to actually announce in the market that we would be offering a blanket free time in addition to the contracted free time for the full lockdown period, which was at that stage due to end on the 14th of April. And then actually after that, about 2 days after that, the DG Shipping actually came out with a recommendation or a request for the shipping lines to do that, and many shipping lines did. I don't think everyone, but many of them did, or offered at least a special tariff. And then after that, you know, when the lockdown got extended further till the 3rd of May, and I must say at that stage in the first lockdown, as I described earlier, things were quite bad in the logistics ecosystem. So we felt it was the right thing to do for our customers, even though we desperately needed those empty containers back, particularly in China, where things were picking up substantially for re-export. But we decided it was the right thing to do to support the trade. And I think many of the shipping lines ended up doing it. And then for, you know, beyond that, what we've done is we've also offered for the rest of the period up until I think it's end of this week or end of next week, a special tariff, so that even if your cargo has been lying there, let's say since the 10th of March in a particular port, you know, if you cleared it last week, you would have paid something like, for a 20-foot, $120 flat fee, you know, which is a tiny fraction of what it would normally cost, you know, for detention. So we've tried to be flexible. A number of shipping lines have actually waived or granted more blanket free time. Some have not done anything. You know, it very much depends. But I think we've done a lot to support the trade. But remember that, you know, we also need the containers, and I think that it's very, you know, it's not always the right thing just to look at it from the point of view of you know, one's own interests. I think it's important to have some empathy and understand that shipping lines need the containers, and also that, you know, it cannot be expected that one player along the ecosystem should be, you know, giving all the freebies as such. And we have seen some abuse. I must say, we have seen some customers which they've told us, you know, frankly, we're using it, we need it for warehousing. And again, I think, you know, what we saw is after middle of April, things really started improving along the logistics ecosystem. And even in the last 2 weeks, we've seen about 2/3 of our long-standing cargo be cleared, which is tremendous.
Considering the fuel being at the lowest and demand of cargo less, is there a possibility by the ship now taking longer route via Cape instead of Suez that probably increase the lead time from Asia to Europe and vice versa?
Yeah. So very good question. So in 2009, when the financial crisis really hit, then shipping lines were looking at ways to to basically adjust to the new reality.
Mm-hmm.
And one of the things that they did in order to conserve oil consumption, they started sailing around the Cape in order to, even though it's a longer route, it actually consumes much less fuel because you can slow steam. So your consumption curve is very aggressive on a container ship. So as crazy as it sounds, it would take a week longer, but it would actually be cheaper for the shipping line. But today, it's not something that's very popular. The economics are not that exciting anymore, even with the oil prices being what they are. I think today there's also a lot of focus on just in time. So I think a lot of the market wouldn't be willing to accept that. So we don't have any plans. What we are seeing is the strong blanking program being implemented by a number of shipping lines, including ourselves, which means that you actually skip sailings and you idle some of your vessels. And that's just in order to cope with the new demand levels. So that we are seeing for sure. But I don't think you'll see slow steaming come back anytime soon.
Okay. Do you anticipate quick rebounds in international trade?
Well, we have very low visibility at the moment. I think for the first time, in a long time, this is the case. We've said that we expect in the second quarter of this year that volumes on shipping volumes globally will drop 20 to 25%, which is absolutely dramatic, as you can imagine. And if the U-shaped recovery holds true, and Europe is already starting to come back, and if the US can start to come back towards the end of quarter two, beginning of quarter three, then we can see a big improvement in quarter three. So we are, but again, it's so difficult because there's so many moving parts in this and so many variables that we've in fact suspended our guidance for the year to the market. We've said we actually can't give you a guidance in terms of our financial results for the full year because there's just limited visibility right now.
Cool. Mr. Vinod Jain is asking three questions related. How the American, European, and other nations proposed actions against China due to COVID-19 will impact global supply chain management. And the second question is, will shipping lines give preference to their national interests over commercial interests?
So I mean, look, I think in terms of China, as I mentioned earlier, I think there's definitely, this came as a total shock where, the largest supplier of finished goods globally, what on earth, who on earth expected something like this to happen? And it came as such a supply shock that I don't think anyone has an appetite for something like this to happen again. And that, to be caught in such a situation where you're unable to supply, meet your commitments because of a shock in China in production. So it certainly seems that, there's going to be some change in sourcing. I think also it would be nice to see India, position itself to derive some of that benefit and to take a leadership position and become let's say, a producer of choice for certain commodities. I think there is an opportunity right now. As shipping, the interests are the interests of our customers. So if our customers need us to, operate a route between, from one port to another, that's where we'll deploy capacity wherever the demand is. So, so it's not so much about national interest as such. It's more about what are the customer needs as they evolve.
Of course. Next question. Nowadays, new fees imposed by shipping lines which is weight deviation fee, but there is no clarification on it, like tolerance plus minus or something like that.
I'm not aware of this. I'm sorry.
No? Weight
No.
deviation fee.
Rate deviation fee. I'm not aware of it.
Weight. Yeah, okay.
Sorry. I'll check it out, but let's put it on the list to check out. I'll come back on that one.
Sure. We'll send you all these things anyway, so
Sure.
you'll be able to go through it later.
Sure.
Maersk has idled 10% of its fleet. How will the current situation impact companies' plans for placing new orders? In general, will the COVID crisis slow down freight operators' fleet modernization plans?
So I think if we look at the order book, just to start with the order book today, it's quite reasonable. There's not a hugely ambitious fleet plan in the industry to add a huge amount of capacity. I mean, when the global financial crisis hit, the order book was more than 100% of the existing capacity. So the shipping lines at that stage, because things were, market was strong before the financial crisis, so everyone placed orders in line with this vicious circle that I showed you. And but we don't see that today. We see a much more measured approach by carriers. So I think in terms of the first part of the question, today, I think if we look at India, for example, even despite the massive drop in exports, which is now starting to improve again, we haven't had a lot of cases where we have not been able to serve the needs of the market. The only thing is that because there are blanked sailings, it can increase the lead time. So for example, if we had a sailing every week, let's say from Kattupalli to Shanghai, for the next month, it might be once every 2 weeks. And that means that things could be slower until the demand recovers and it warrants the reinstatement of full weekly services or the full strength of the services. So yes.
All right. Thank you so much, Steve. Questions are pouring in. I can see more than 20 more questions. So what we will do is we will send you these questions and
Sure.
you can answer some of them. We will send it back to the people who are asking these questions. All right. So in the interest of time, we will have to, we cannot take all the questions right now. So I would like to very quickly invite our CEO Priya Pansare to say a few words.
Shipping industry is an adventure. Wow, that's a beautiful statement, Steve. Thank you so much for providing us such great insights. It was an honor to have you today with us. I would also like to thank Dipesh, who is the Vice Chair of IBG Committee. And on this note, I will hand over to our President, Vikash Mitesan, to give his closing remarks. Over to you, Vikash.
Thank you, Priya.
So what an amazing session. Steve, in my earlier days, I was an exporter. I used to go to the docks every time I had a consignment going. So I learned a lot about shipping. I learned a lot about the docks, and it was really fun. This has been a great session. I don't know if anybody is into export and import and they actually go to the docks. This was really good. Thank you very much.
Thanks, Vikash. Thank you very much. My pleasure. Thank you.
On that note, I would like to say thank you to Steve once again, and thanks to all the participants. This session is being recorded, and we'll be sharing the link with everyone. So thank you once again, Steve. Have a great day. Bye-bye, guys. Take care.
Thanks, Dipesh. Thank you, everyone. Bye-bye.